Hey guys, what is happening? Joe Von Grichten here, and I got my partner in crime, Hunter, the Pip Hunter Burkett, with me. Hunter, you want to say hello?
What's going on, guys? What's going on?
Yeah, so he doesn't like to show his pretty face because he's getting ready to share some sauce with you and share his screen, and he'll do that in just a second. However, if you're new to the channel, awesome, welcome to the channel. Make sure you pound the subscribe button, and make sure you also select the little bell by it, so that way you get notified anytime we have new videos that we post. We post about once every other week, sometimes a little more, sometimes a little less, and you'll be notified. You don't have to worry about when we do it. You'll automatically be notified. If you pound that subscribe button, hit the bell next to it as well. And then we would love to have you put in the comment section below, I subscribed. And if you have any questions or comments about this video, or you'd like something in a future video, something for us to talk about, then go ahead, put it in there. We'd love to get back to you. And for those very few that take that time, as a special thank you, you may just receive a very special gift from Hunter and I. So without further ado, today we're going to talk to you about daily market maker setups. All right, we are foundationally market maker traders. And for those of you that don't know what that is, you're in the right place at the right time, because today Hunter is going to screen share a shot of some trades that we took last week using market maker setups, and walk you through why we took them. And you'll see that we absolutely crushed the week last week. I am excited to have him share this with you and really drop some sauce on you guys, because this is really, really good stuff. And I'm going to tell you this right now. I'm going to give away the secret. Let's see if you can figure it out. You want to trade away from this. Without further ado, think about that. Have that in your mind, that statement in your mind, as you listen to Hunter share his screen and walk you through these daily market maker setups that we took last week in our academy. And while he's sharing, I want you to keep that in mind. What do you want to trade away from? Keep that in mind. What do you want to trade away from? If you can remember that, you'll be able to crush the market. So without further ado, Hunter, all yours, brother.
Yo, what's up, guys? I am typing something really quick, and then we'll get right into it. I just want to get this in here real quick. And we will start. Share screen. Let's go.
Beautiful.
All right. Can you see my screen, Joe?
Yes, I can, sir.
Cool deal. So, guys, we really crushed the market last week, and Joe and I was gonna, bring out the video last week, but we got swamped with our VIP class. But now we're here. We're going to go over the previous week of the trading that, inside of our academy, guys. We do live trading every day. So our students are allowed to get on with us, see what we're doing, see what we're seeing, see how we're reacting to this market, and doing all the good stuff. So what I'm going to be showing you is some of the trades that we took last week off Euro CAD and silver. Those two really gave us some really good trades throughout the week. And you guys, you might know that you see a bunch of stuff of people saying their history looks like they just took thousands of trades, but really the case is, guys, less is more. We're us as market maker traders, we're looking for high probability sets, right? And when you look for those, your loss to win ratio, you start to win a lot more when you start to look at it that way. And you can see that your percentage of win rates is steadily going up, right? So just like Joe said, trade away from what, guys? Trade away from the peak formation lows and the peak formation highs. Okay, this peak formation low was established on Euro CAD. As you can see, we have a multi-day M pattern right here. Okay, a multi-day W pattern. I'm sorry, multi-day W pattern. Okay, we broke some structure here, and we continued, guys. And now, what is our next move? You got to ask yourself, what's my next move? Okay, You can use numerous of things to figure out that this is a peak formation. I'm going to show you one of them right now, guys. 4 hour, using your TDI, 4 hour shark fins is a very good indication that there's a shark fin, that there is a peak formation, low or high, available. And normally from that shark fin, you usually get 2-3 days of rise or fall from that. Okay, now, is it 100%? Absolutely not. You need to put the other factors into play when it comes to market maker, like your ADR counts, using your EMAs, your 3 to 5 days rise or fall, your market maker cycle, and things like that. Now, if you want to go in more depth of that, come join our academy, and Joe and I go very in depth about the way we trade market maker, and you'll get a lot of sauce and a lot of knowledge in that aspect of it. So, guys, I want to show you the trades that we took. I seen this setting up, okay, on Tuesday. I got my trade, and if you guys have not watched our 3 types of M&W patterns, go watch that, because it goes hand in hand with this. And I want to box in this trade here too as well, guys. And the reason why I'm boxing these in, guys, is because now that I've got a peak formation low set, my next move is to only look for buys. Okay, remember what I said, remember what Joe said, trade away from. Okay, you want to trade away from the peak formation lows and the peak formation highs. Okay, so I'll go to the 15-minute, and we take trades off the 15-minute. Okay, you can see the boxes that I circled here, that I boxed in. Okay, you can see, let me zoom in a little bit. You can see on this trade here, okay, this is a type 2 pattern. Okay, the reason why it's a type 2 pattern is because we come out of Asian, right? We fake traders to go short, right? We set a left leg, we come up, we set a right leg, we stayed inside of the Asian box, right? You come to the bottom of Asian, stopped, come up, come back to the bottom of Asian, stopped. We created a W pattern. You can see here that we have a little bit, not so much, but a little bit of divergence here. Okay, we got, if you ever heard me say shark out of the water, back in the water method, there it is. We were a little bit right there of oversold, and also we're trading with the trend. Okay, so we took this trade. I seen that we had some nice volume, some nice candlestick patterns, bullish engulfings, and we were able to snag a couple entries out here. Okay, so I seen this bullish engulfing, I caught the trade, we took the trade, we got some pullback entries off of it, and we were able to reap the benefits off this trade. Okay, now I'm gonna go back to the 1 hour, and you guys can see, once you get an inducement like that, normally what do you have after that? You have consolidation, right? And it happened the same thing, guys. Once you start to understand what this market's doing inside these cycles, it's almost like taking candy from a baby, right? So we had an inducement, we had a little bitty pullback, consolidation. That's what this is. This is a level 1 in a market maker cycle. Okay, a level 1 here, level 1 of consolidation. And I want to show you on the 15-minute time frame of what they were doing here on this next trade. You guys can see, here's Asian. What did they do? They fake people to the downside, right? Faking people short. Set up a left leg. We came back up, made a neck, came back down. Everybody's like, yeah, it was just a tiny pullback, we're going back down, and look what they did. Okay, you can see over here, guys. Let me erase this box so you can see what I'm about to draw out. Remember, you're trading away from the peak formation low, right? You're going with the trend. You're above your 200 on this trade. Okay, current price is telling you on the 50 that we're moving up. Once it broke the 50 here, it was game over. Okay, you have divergence here. You guys can see that you're oversold at this area. Okay, shark out of the water, back in the water. Boom. We had a nice volume candle. Entry was here. We got a little bit of pullback. We got a couple entries off that pullback of the candle, and we were able to score. We did have a little pullback here, but guys, we're intraday traders. We're looking for 1-to-1s, 2-to-1s, and we're out. Okay, the trade did perform very well afterwards. If you wanted to hold the trade, it was totally fine. That was only level 1 of consolidation, so you knew you were going to go up to level 2, right, of consolidation, which was here. Okay, we smoked this trade on Monday, and we got this trade, on Tuesday, and we got this trade on Wednesday. Okay. Now, the reason why I'm showing you this, and you're probably thinking, well, it looks so easy because it's already played out. Guys, this is the reason why that it's so easy is because I am trading away from the peak formation lows. So the confidence level that I have, my students have, Joe have, is high, right? Because, and you have to look at it this way, guys. One or two things is going to happen in this market. You just want to be on the winning side, okay? I stress this a lot to my students, to everybody else that I preach to. Guys, this market, if you understand how to manage money in this market, you're going to go a long way. It's just like flipping a coin with $300 on one side and $100 on the other side. You're going to flip it all day because the risk to reward is there, okay? You want to make sure that you're letting these trades materialize and getting your money and you're getting out. Or you're letting these trade run and getting your risk to reward further and further and further. So when you do lose a trade, it doesn't take you down. It doesn't take you down in your account, right? So you have to be on point with that. Make sure you're getting your risk to rewards. So in this case, we had a usually we don't set it past the 25 pip stop loss. I think I had 25 pip stop loss on this. I set it right past the 200, right? And we were able to net, I ended up taking like a 45 pip take profit, a little more than a 1-to-1, almost right at a 2-to-1, which was great. So the risk to reward, even if we let the trade run, guys, you can see the upside on this trade was tremendous. Okay, now let's go to another pair that we smashed. Okay, now this is silver. Silver is a little bit more volatile as far as pip value too as well. It pays really good, but as you can see, guys, we had a multi-day. Here's your left leg right here. Multi-day M pattern, just like I said on your own cat. Oh yeah, I didn't show you. I'll show you really quick. Okay, I'm gonna go back to the 1 hour, and I forgot to show you. Remember this peak formation low. Remember what I told you about? And look at the divergence, guys, across the board here, from here to here. Okay, from here to here. You see what I'm saying? So the momentum was gone out of here, and plus you're counting your ADR right. And that might be like, what is he talking about ADR? Like I said, if you want to know more about what I'm talking about, get more in depth, get more clear on market maker, we do have YouTube videos that we have talked about ADR and things like that. But if you want to get more in depth, join the academy with us. You'll love it. So what I was talking about is figure out, peak formation lows and highs. To help you with that, you can go to the 4 hour and you guys can see that this shark fin put out a shark fin, so you can figure out that this was a peak formation low, right? After it shark finned out, you even had a double bottom here. It still painted the W pattern, shark out of the water, back in the water method, divergence, and the trade took off, right? Same thing here. You guys can see that this week, it set a new peak formation high on Thursday. You can see the shark fin. And look what it did this week. We have absolutely crushed EuroCAD this week as well, which I'll show you a couple. But you can see how hand in hand it goes. Okay, use these to your advantage. You can see how accurate they are. Okay, you can see how accurate they are when they do touch. Now, did they work 100%? No, they don't. Don't just say, oh, there's a shark fin, I'm gonna sell, or a shark fin up. There's a shark fin to the downside, I'm gonna buy it. Don't do that. Wait for confirmation. Okay, you have to have your trading plan in play. You have to have some rules set before you take trades. Okay, just use this as helping you. Okay, so I'm gonna go back to silver, and you can see right here multi-day M pattern. This pattern locked in. right? The neckline was broken, so it established a P formation high. We can go to the 4 hour, look at the 4 hour, and look at the shark fin. Okay, shark out of the water, back in the water method. Really good, high probability trade set. You can see that there was a shark fin available, and yeah. Let me go back to the hour. Okay, now let me go to 15. I want to box in these trades. Okay, trade. And you guys have seen me talk about, you know, a market maker cycle. Guys, when you have a multi-day M pattern, and normally is your reversal, and what do you have? An inducement, pullback, okay? Trade. Inducement, pullback, trade. Inducement, right? W pattern, reversal. That's a market maker cycle. A M, A, W. W, V, V, M. Okay? And you can also count it with ADR. What I mean by ADR is the average daily range. You times that by 3. And normally when that ends, you get a reversal. Okay? Or you can count it in days. 3 to 5 days rise and fall. So let's count it out. 1 day of fall, 2 days of fall, 3 days of fall, 4 days of fall. Reversal. Okay? It's simple. If you, like I said, you want to get in depth with it, hit us up. Join the academy. All right, cool. So these two trades we smoked throughout the week of last week. Okay, I'm gonna go to the 15, and I'll tell you what type they are. Both of these were type 1 patterns. Or I'm sorry, one was type 1, one was type 2. Okay, so we had a peak formation high there. There was the multi-day. We missed this trade. I know it makes me cringe a little bit, sad, but it's okay. The very next day, look at this trade, guys. This is the stuff that you want to look for. This is the trades that are high probability. Okay, you've got 2 legs here. Comes out of Asian, boom, fakes people to the upside, right? Boom, neckline, second leg, shark out the water, back in the water, divergence, trade. We smoked that trade. Okay, exactly the next day we set up a type 2 pattern. A type 2 pattern is when an M pattern or a W pattern, in this case an M pattern, it hits the top of Asian and stays in between this. Okay, this is a type 1 because it busted out of Asian, it formed the M pattern above Asian. Okay, a type 2 is when it forms at the top of Asian inside the box. Okay, a type 3 is it when it forms on the middle line of the Asian. Okay, so you need to, if you guys go watch the video, we have a video on all 3 types of all 3 types of patterns. Go watch that. Go do some homework on it. Okay, the only way that you're going to get better is if you do homework. You do chart markups. Okay, you want to be great at trading, do chart markups. How do you think Michael Jordan got good at basketball? He worked at his craft every day. Okay, so, and then we end up smoking this trade too, guys. Boom. Okay, we call both of these trades on our live trading calls, and they were beautiful. Okay, you can see the divergence here as well. Okay, and we have our rules in place. Okay, we have our rules set with our trading plans. We took the trade, we won. We reaped the benefits from it. Okay, you can see that I'm trading with the trend. Trend is your friend. When people tell you that, it's true. It's true. It's high probability. I don't care about so many trades that I'm missing. I want high probability. I want the trades that, guys, if you think about it, like if you have high probability trades and you're able to, you know, stick your full percentage of risking on this trade out of 1 trade or maybe 2 a week versus, you know, getting what the percentage that you want weekly out of 2 trades versus like 20. Come on now, it's a lot easier to do that. It's a lot more controlling. It doesn't tire you out mentally. It's definitely the better way to go. Okay, did I miss anything, Joe?
No, man, you're great. I mean, the one thing that I would just, you know, reiterate to you guys is watch our EMA training as well. You'll understand that the blue and the white lines on the screen, if you're new to trading, those are called EMAs, or exponential moving averages. And those are great triggers for entries. So he doesn't have the 13 EMA on there right now. However, when there's a 1350 cross or a blue and a white line cross on the 15-minute, those, and there's, if you look to the left, there's a multi-day M or W pattern that are set up. He's loading it on there right now. When you have those, you can typically hold the trade for anywhere from 1.5 to 2, maybe even 3 days, and catch that full run. So if you don't have time to sit and watch your charts, the cool thing about it is you can see on that M pattern that's set up in the green lines that he drew for you, if you caught that anywhere near the top, you could have held it for 1.5, 2 days easily, caught that entire run. So you could have entered it on an intraday trade, however, held it for a swing trade and caught, you know, on silver there a chunk of pips. All right, or on EuroCAD it was the same thing. On EuroCAD, the one trade up was 190 pips up if you held it for 2 days. All right, not even 2 days, it was about 36 hours, I believe. So
exactly. And what he's talking about, the EMAs too, guys, is like you can use this to also figure out where you are in your cycle. Okay, so like you said, the 1350 cross, okay, normally when that happens, it locks in your pattern for the reversal. Okay, the very next cross is your 5200. This is on the hour. Okay, 1350 cross on the hour locks in your pattern. That's level 1. 5200 cross, you're at level 2. Okay, and then you have your level 3. Okay, and that also helps you understand, okay, if this crossed at this area, and look, it crossed, okay, when this pair was moving down in Asia. Okay, when it moved back up and retested the 50, do I still have room to run? Absolutely. You're in level 2, there's your trade set. Okay, and then it came into level 3 consolidation at the bottom here, and then reversed. Okay, so there's numerous ways to figure this out. You just got to figure out what works for you. Okay, and it's just like going in depth on the pairs that work for you. You need to pick the pairs that fit your personality. You do not see all 20 something pairs on my screen on the bottom here. These are the pairs I trade every day. I do not trade every pair. It's not necessary. It's not necessary at all.
Yeah.
Okay.
Yeah, that's beautiful. I'm glad you brought that up, Hunter, because it's really, really important, guys, is that, yeah, you saw he has about 10 pairs that he monitors on a regular basis. However, I know Hunter and I have traded together now for over 2 years together on a daily basis for 2 years, and we've trained together on those days as well for most of that 2 years, hours a day to really hone in our craft. You don't necessarily need to do that. However, the more you put into it, the more you're going to get out of it. I do like, though, that what he was saying is what he does every day is when he comes into the market and he's looking at, he identifies 2 or 3 potential trade setups that he's looking for entry patterns for and entry triggers for. And then he either enters them or he doesn't, based on his rules that he has for his trading plan. And that's really, really important, guys. He's made it systematic. We teach our students that is to create a trading plan that works for your personality, for your risk tolerance, if you will, because trading Forex can be very risky. We are not financial planners. We're not offering financial advice. We are strictly offering educational training here for you, and you can take and use it as you will. It's up to you at the end of the day to identify these. However, our students are crushing it, the ones that can identify those peak formations. And remember what I said, the statement is, we want to trade. If you learned anything from this video, take out everything that Hunter said except the statement that I made right at the beginning and what he shared with you right at the beginning of his screen share, which is we want to identify the peak, lows, or highs, and then trade away from them, like I said. All right, so the fill in the blank is trade away from the peak formation high or low. All right, so whichever it is. When you get that dialed in, all the other technical analysis it almost becomes irrelevant. because you will crush trades, or you have the ability to crush trades. So without going any further down that rabbit hole, Hunter, man, that was fantastic nuggets. Exactly what I knew you were going to share with them. Thank you for that. If there's anything else, go ahead and final thoughts, and we'll close this out.
I just want to reiterate, guys, make it simple. Trading should be simple, not hard. The only way that you're going to make it hard is if you make it hard. So just like Joe said, systematic is the best way to go, right?
Yep.
So
Yep. Beautiful. And he brought something up really important, guys. He's given, like, just handing out Chick-fil-A sauce left and right now, like, just loving it, giving you guys love. He gave you a little nugget there, and if you didn't catch it, you need to rewatch this video, which is mindset. He kind of seeded that a little bit, is really just overcoming your mindset. The number one reason why traders fail is everything that's between your ears. All right, the emotions, all the other stuff that comes with limiting beliefs around money, your success, your fear of success, and all that other good stuff. And how you can get rid of those things and erase those things is by systematizing, keeping things simple, and just staying disciplined and taking consistent daily disciplined action, and compound your account over time, and you will reap the benefits. Trading Forex, you'll absolutely love it. I'm like jumping out. I'm so excited right now, Hunter. Like what you just showed, I'm just like, man, let's go. Tomorrow's going to be a great day of trading, guys. Today was a great day of trading. We caught some great trades on Monday, some great setups as well, using this very technique. Again, like Hunter said, if you want more one-on-one training, we have it for you. Our academy, we didn't build it to make this huge empire and just get a bunch of people in and throw videos at them and say, go figure it out on your own. No. We do live trading sessions daily with our academy members. It's wide open. All right. And it doesn't cost any extra. It's, we have a one-time fee for our academy. It's a lifetime access right now. We are going to start moving to probably a subscription, just because so we can handle the demand. We really want to also be able to give as much of our time as possible and not charge you guys anymore. Because at the end of the day, we built our academy to pay it forward. We built our academy to be surrounded with people that are hungry to go out and to use Forex as a tool to create their lifestyle that they've always dreamed of and never quite found the solution or the thing that worked for them. Well, I'm telling you right now, Forex can fund all your passive income, because really at the end of the day, like T. Harv Eker says, financial freedom is understanding what your monthly expenses are and then creating a passive income stream that it at least meets that monthly total of expenses or exceeds it. When you exceed it, you are financially free. And Forex can be the tool that can start you on the road to do that. So without further ado, guys, thank you for stopping by again. If you're interested in our academy, there'll be links in the description below. Check it out. If you want to talk with Hunter and I, go ahead and schedule a time and we'll do a discovery call with you. We'll spend time with you. Doesn't cost anything, and we'll see if this is really for you. All right. Whether you're new to trading, which we love to work with new traders, because then we don't have to break all the bad habits that they've learned watching YouTube videos and getting mentored by people that don't know what they're doing. All right. If you meet one of those things, or if you actually have been trading and you just haven't been successful at it, that's great. We'd love to work with you. We'd love to help you so that you can use Forex as a tool to create your dream lifestyle. I know that sounds cliche, guys, and real markety. That's not what I'm going after. The reality is how much longer are you willing to be sick and tired of being sick and tired? How much more time are you willing to invest exchanging your time for dollar bills, building somebody else's dreams? Let that sit with you guys for a second. All right? Because Forex has the ability to give you, to be the tool in your tool belt that will help you start setting and funding those passive income streams that we were talking about that can help you become financially free. So with that, guys, Take care. We hope you enjoyed this video. Sorry for going down the rabbit hole with you and going on a rant. Hunter and I, we love you guys. We thank you guys for stopping by. We look forward to seeing you in the next video. Until then, take care, guys. And Hunter, what do they need
Pippin and dipping, guys.
Pippin and dipping. Pippin and dipping, boys and girls. We'll see you soon. Take care.